This is Justin Pulitzer. This is my weekend review video for Sunday, June 18th, 2017. A good amount of stuff to cover. We're going to talk briefly about the Fed and some of the macro factors and the deals this week, get into the 10 market keys, the major market indices, the momentum stocks, and of course cover some of the mergers and the stocks that were affected by the merger, i.e. Amazon and Whole Foods, and then talk about some of the, some of the retail names and such. Anyway, let's get to it here. So we had a Fed decision. We know they hiked interest rates. The funny thing about this was that as they hiked interest rates, rates stayed low. They didn't really rally on the Fed decision. The Fed basically took September off the table. You can see the probability of a hike in September is rather low. November is also almost infinitesimal, and then December starts picking up a little bit, but nowhere near certainty as far as hiking goes. I think that the Fed statement, in my view, is a little bit more hawkish. I don't know why they were raising interest rates based on their criteria. They are far from reaching their 2% inflation target. They had talked about symmetry, meaning letting inflation run a little bit hotter before really kind of applying the brakes heavily. And then they lowered their core inflation target. Their rate. And then they also potentially said that they may have to raise their end target rate. They had originally said they were going to end around 3.5%, and they hinted that they might be ending at a higher rate now. I don't know where that would be. They haven't mentioned that. They also got a little bit more clear with regard to their rate, their policy with regard to balance sheet reductions and then interest rates, but they raised more questions than they answered, because they didn't answer, are they going to start doing quarterly balance sheet reductions in addition to the rate hikes, or is it going to be one and alternating, or what's going on here? So they raised more questions than they answered. I think that the market didn't like that. I think a lot of the weakness in some of the momentum names anticipated this more hawkish Fed. Keep in mind they like low PE. For high PE multiples, they like low interest rates. I don't think the Fed was really crazy hawkish, but they were definitely a more hawkish tone than they've had in the recent past. So that was definitely something to note. And interest rates, it looks like the rest of the year they're not factoring in too many more hikes. Maybe that's because they're going to try balance sheet reduction in December, because they did mention that they were on course to trying it this year. Now, the Fed in the past has been very they talk tough and then they don't really do much. I don't want to get too much into my rationale behind it. I detailed a lot about the Fed in my video. If you want to hear my full Fed critique and analysis, I don't want to be redundant. Just watch the video after this, my midweek video, the live, and it's a YouTube live video, and I cover that in quite a lot of detail. Anyway, let's start out with the bonds this week. I usually start with the VIX, but we're going to start with the currencies and bonds because we're talking about the Fed. You can see there were 3 days here were above the downtrend. So I think you could use this 3-day range as a gauge. If we cover the high, I think we would at the very least see 27s and maybe even fill up the gap to like this 30.09 or the measured move to 129s. Below the 3-day low, I think we would probably come back down to fill this gap and retest the 200 MA. So that's my take on TLT. Long above the 3-day high, short below it. You could also take a look at the dollar. Now, this is the Dixie. You can see that we got a bit of a look below and fail here. We had the 61.8. This to me looked like I was looking for a retest of this low in the channel low. We didn't quite get it. And now we had this kind of push up above the trend and now a little bit below it on the 20 MA. So if you can clear this 2-day high, I think the dollar would probably want to see this downtrend and maybe the 50 MA. And that probably wouldn't play well for the metals and so on and so forth. If you lose this low, then you could maybe want to come back down and retest into more prominently into this kind of reversal bar. But look belows and fails usually tend to rotate to the higher end of the range, and you can see the higher end of the range here is the downtrend, and maybe the 50 MA is there by the time we get there. Although my guess with the way currencies move these days, this would be a pretty quick move, because over the 2-day high is probably where all the shorts have their stops. And you can see this day here was a pretty big, important day. You had multiple days down, this kind of flash, look below and fail, and now back up, and now we're holding the 20 MA. So this 20 MA here is very key. If you can hold the 20, I think it could see the 50. Below the 20, I think would come back down into the lower end of that range. In UUP terms, that's the ETF, I've been wanting to see a kind of retest of the channel low / range low down at 24.47. We didn't quite get that. We had this big kind of, again, a look below and fail, a rally up, and now holding this like 10 and 20 MA confluence. So if you want to try a right or right out trade, I think you could do it along against this kind of this gap fill. If you start losing and going more into this body, then I would say it's probably more pronounced, and we may want to revisit the downside. I do have some resting buy orders down here in this like 24.47 level. I think that area would be a good buy area, particularly the quicker it gets there. Let's switch back quickly to the bonds and the proxies, like XLU, the utilities. This took out the head and shoulders pattern. This got the channel high and is now kind of just hanging out high and tight. I don't know if this is going to necessarily bust through, but it's definitely got a bit of an uptrend in place now, and the 50 MA is roughly around that trend line. So I would be a dip buyer, maybe on a retest of this like breakout area in the 52s if this were to have a pullback, because if the Fed is going to be if interest rates are going to stay low for a while, that to me would be an interesting area. What I would be looking to do down here is maybe longer dated, sell some out of the money puts around like the 200 MA. You can see that was where all this resistance was. This should be support. If you're bearish, I guess you could buy like these puts and then like sell 2 times out of the money or 3 times out of the money on longer dated like plays. Like if you want to get XLU long but you want to be short term, that would be an interesting way in my book to play it. HYG. This is just kind of hanging out and grinding around the top end of range. It's still within the uptrend, but acting a little bit weaker the last couple of days. You have a 50 MA here, which is important, 100 MA, and then a 200 MA below. I don't really I think this is just going to kind of chop for a while in range. Maybe it wants to revisit the lower end of range to see the 200 MA. But until you really start definitively losing the 200 MA, you can see it was all this support here, here, here. It's been a while since we had it. I don't really think that there's going to be too much to talk about. However, this could be a good gauge for oil to see how oil is going to play out. This has been kind of equated with oil for a while. We had the I guess the kind of the proxy. It was used for when oil was coming down. People got all worried about this being a how do I say it? A kind of a concern for oil, meaning companies that need higher oil prices for I guess to pay off their debt. And if this were to start falling out of bed, I think that would be meaning that oil is coming down lower. So keep an eye on this as kind of a proxy to see if oil is kind of correct or incorrect. Let's get to oil in a minute, but let's talk about some of the other commodities quickly, particularly the ones priced in dollars. This is what happens when you start getting creative and mixing up where you're going. I had a different order, and now I'm playing with it. Was that 31? Let's see. Yes. So let's readjust that. So this is gold. If the dollar is to firm, gold may continue lower. You can see we're below the 50 MA. The first stop here to me, if there is weakness, would be like this 100 and 200 MA confluence. If I had my druthers, You can see we've had these kind of larger pullbacks in gold. I'd love to see a retest of the old downtrend line and a retest of this like secondary, first of all, this uptrend line and this old secondary downtrend line, and that's kind of close to a gap fill. So this area to me in the 116s would be an interesting long spot. The 200 MA here, you can see, was kind of a key. We rode on either side of it. Once it broke definitively is when things got ugly. It was resistance here, kind of resistance here. Again, a little here, but once we got through it, there was a rally. Supported here, fell again hard once we were below it, now back up above it. So that's going to be key. The 200 is very key for me. I'm curious to see if that's going to hold it again. The 50 has been important, and we're below it. So if we lose 50s, and I usually think we see hundreds and 200s. So this area to me would be the first target, and this would be the for me a screaming buy. So I'd either like gold on a break of this sort of like intermittent downtrend line. You could see we had this really big day. This is the Fed day. We're below that day low. Quick side note. With regard to Fed day lows, I like them for more, I treat them as like earnings days for the entire market. So I like it for major market indices, bonds, dollar, commodities like gold that are key off of the dollar. I don't necessarily think for stocks, individual stocks, it's as important though. So I just wanted to clarify that. So this is the gold, my theory in gold. If the dollar does continue to firm, so either you want gold back up over the 50 MA long, back into range, like this would be like a kind of a look below and fail, or you want it lower down into these regions is my take. Silver, we had talked about taking profits at that 61.8 bounce point, basically close to here. I'm sorry, here. I'm like, what am I talking about? This is only 50% Feb on the big. But here, this was the 61.8. Remember I talked about between the 200 and the 61.8. It looked a little bit above, but now it's coming back down. Now we're sort of on this old school regression line, and I'm going to start looking to sell out of the money puts again, maybe 15 or 14 strikes and below. I think that this is just a big consolidation pattern, and we kind of now have some lower highs in. So I either want to break of the downtrend line, and you can see we snapped this uptrend, so we can get rid of that. I either want it lower into this region or higher over the like 200 MA. So that's my take on silver. Gold. I'm sorry, not gold. Bitcoin. Now, I have to say I'm a little disappointed. I wanted the 50 MA and 61.8 confluence, also this breakout level, for a buy. We didn't quite get there. We got a very hard reversal just below at this kind of almost the gap fill, basically. I was looking for just a little bit more into here. We didn't get it, and now we're kind of back up at it. So we're below a 10-day here, which was key support, and a 20. So I think that we have a lower high. We're starting to make some lower lows. Bitcoin can stay high for a while, but I'm under the impression that it's going to be in either consolidation mode or pullback mode for a little while. So I'm disappointed that this didn't get hit. I don't know if I would buy it now. If we were to come back through again, maybe I might, because you can see it's been kind of like this choppy movement. So I think row on the 50 MA, if it were to come back down, if it breaks through here, just GTFO, and then my next target would be the old, I mean it seems like such a long time ago, the old consolidation funnel. The back side of that would be interesting to me wherever it is at the time. If it's like a 200, and preferably if the 100 MA is there, like if this comes up a little bit more and then this were to come down, this area to me, all this congestion in here, I think would have, for at least for a day trade. Let's get back into order here, and I'm going to try and stick to it. So let's go to the oil. All right, so this is, we've had periods like this with these down moves, and we have it again. We're basically coming down into the reference range, and you can see we had a bit of a bounce here. Sometimes we have these few days, so this could be into a few days, maybe to the channel high before a move lower. I really need to see this thing stop making lower lows and lower highs, like a trend break, before I get really hopped up on oil. The risk would be, of course, a retest of 42s and maybe even 39s. Listen, this could happen. However, I'm under the impression that the Saudis want to keep this propped up. I mean, they even turned on Qatar because they were cheating in OPEC and kind of did it under the guise of terror. But look at this. The down channel and the 10-day are right in a sync. So I think you could try row short against that. If it were to break to the upside, then I think we would get a move to the 20 MA. So if there's a rally up to the 10 MA, row short. If we get through it, obviously you'd cover and you'd play flip long for a move to the 20 MA. You can see this was a lot of support. It broke. It should be an upward resistance. So you know what I think. When we break 10 MAs, I think we see 20 MAs in either direction. So that's my take on oil. Oddly enough, let's take a quick look at XLE, right? These are the oil stocks. I've been waiting very patiently down for this gap fill in 61.8 confluence, and we haven't gotten any fills because it hasn't gotten down there. The 50 MA has been the resistance here. So as long as this is below the 50, I think there's still downside risk. If we start getting sustained closes above the 50 MA, then I'll think that there's some pattern change. You can see this was sort of the reference support. You had to look below and fail, rallied up here, back below, here kind of a retest, and now back below. So I really need to see it clear and hold the 50 MA to be bullish for a move back up to like the 100 and 200. If we hang out below here, this could just sag down here. And down here, I would be aggressive. I'd be looking to probably sell some out of the money puts, maybe longer dated, like 56s or below or whatever. I always like to go to maybe the next fib. But even at the money, that's my take. Exxon. Now, this is a good sign for oil, right? Exxon is the leader. Check this out. You had this move down and then a press up to the high end of range. So this was a look below and fail, and we moved up to the high end of range. But look what we did here. We only pulled back mid-range, held the 50 and 20 MA confluence 2 days, and then Friday pushed up strong again to the higher end of range. I think that this is forming a larger bottom. I don't know that we're not going to come back down to the lower end of range again, right? This area has been a sell for a while. My take, this 83 strike is the big Megillah. If you can hold 83, I think we would see the 200 MA at the very least, and maybe even 59s to 6. Like, I'm sorry, 80, basically 85, 90, 86. This to me would be the next kind of move up to complete this bottoming phase. If we lose 83s, then I think we're going to come back down to 81s again. So the next $2, in my view, are dependent on the 83 strike. I've been playing short puts in this opportunistically. Like, I put them out low. I've been covering them up high. So if there's a push up in Exxon, I'll probably be looking to take them off again. But this is oddly, in a weak stock like this, if you are opportunistic and know how to play it, you can do well. You can go far in life. China. All right, so I said this area was going to be resistance, right? This is where the real breakdown took place. It's also a 50% fib. This should be no surprise. I was really very clear on this, and I said that I'd be looking for a pullback. Now look what we have here, a 50% fib that coincides with an uptrend line. 50 MA is kind of right there. The 100 MA, oddly enough, which is starting to become an important MA, look where it stopped here, is riding the lightning of the trend line. So look, this could bounce more. We're below the 20 and 10 MA confluence. That to me would be some resistance. The better play for this, honestly, would be if this just kind of came down into this area. I'd be into it at the 50 or like 61.8 level for a bounce play. I think that area would be a good idea maybe to sell some out of the money puts. Now look, this is only a secondary trend line. This is the primary, right? The primary channel. Moves above it have been unsustainable. I don't have any noise on it below, but if we came into this area, I'd probably be looking to sell these puts, because I do think that there would be some kind of bounce at the very least. And if we did come down here, 37s, 36s. I like those strikes for longs. So maybe a little bit lower, maybe play some put ratios, like buy some of these puts and like sell 2 times out of the money down in this region for a short-term pullback lower. The other alternative here, and it's way too early to say this, and I'm not making this call just yet, but we could have one of these forming. So this could come down even as low as the 200 MA, which, look, is right in the range low. And then this could rally back up again. So I think even if this is short-term bearish, there's a rally in its bones at some point. So that's why I'm comfortable selling the puts coming off the head, at least short-term. Look how long it took to build out this like right shoulder. It could take the whole summer, right? And then when the Fed, hikes again or does their whatever the hell it is they want to do, it could be that's when the problems could really start. Baidu. All right, so this is again, this has just been a very frustrating play. Oddly, I've just been I shouldn't say an uninterested observer. I've been a very interested observer, and I've tried to, oddly enough, I don't think, I don't know, I have to check my plays. I don't think I've been in this for a long time. I've been looking to be in this. I think I got busy here. I meant to be in it on this retest, but I don't think I actually did. And then this fell out quickly, and then I was watching it this day, but this ended weak. Now look, you had a look above range that failed, and now we're coming back down to the lower end of range, right? Look at this. This, by the way, reminded me of what Exxon looked like. You came up to the top end of range, mid-range, and then pressed up again. That's why I think short-term Exxon may have some power. Anyway, here we're coming back down lower. This is the trend, right? So you have double hammers here. So I would either like to put a buy stop in above the high here of basically 77 and above. I'd be long for a play up maybe to the 50 MA. Below these two lows, I don't know if this is going to hold again, and you could push through to 166s. So you could buy like 172s. I'd have to look at what the series looks like and then sell 2 times out of the money, or like maybe buy here, sell 1 here, and then sell 1 down here still lower. Because if this really does fall apart, look, we spent time on the wrong side of the the wedge here. We could play in some symmetry and play for maybe a move down into these lows. So, and if it came all at once, this area to me would be a screaming buy. Like if we had one of these situations, the more days down without relief, the better. When there's bounces and games, it sort of makes that play a little less attractive. But I do like the idea of some put spread, either long above these hammers. I don't think I'd buy this because it's just so close. And you kind of had a bit of a relief and a failure again at the 200, but I'd be interested in like buying these puts and selling like 2 times out of the money. I think that trade could really work well. So that's the BIDU. The Baba. All right, so this is a interesting setup here, and I think a lot of inexperienced traders are going to make a very large mistake here. I think that they're getting themselves very bearish in Baba. Now, I'm also of the opinion that this stock is probably going to pull back, right? This gapped outside of the channel, and it's been pulling back. We talked about this. I talked about this very specifically in last week's video, and I said I thought that this could have a pullback to the old up channel, which would coincide maybe with the 20 MA. I think a lot of people will be short this, expecting this gap to fill right away, and it might disappoint. The 20 MA here has been very big support. This was the only time we were below it, and look, it stopped at the trend line, which is close to the 50 MA, oddly enough. So what I'm thinking, listen, I'm not ruling out the gap fill. Very possible. This is a very extended stock, right? This is my 1.6. Look, this was the range, the consolidation range. This is the 1.618, and this was the 2 times. And this thing gapped right out of there and came right back down. So you have a 10-day MA. So let's keep it simple. If you want to play quick for short, you have 2 hammers here with a higher low, just so you know. Above the 2-day high, I like long for a press up here back up to 142s. If you lose the 2-day low, I think we see the 20 MA really quickly. So those are my 2 trades for Baba. I don't know that the full gap is going to fill, but I do think if we lost the 10-day and the 2-day low, we would see the 20 MA at the very least. And you could probably trim half of it here and then hold the full amount, the balance for the gap fill. And then, just keep trailing the stop. So, like, if this held and it came up again hard, which is what I actually think it could do, you'd be, you wouldn't be in trouble, right? If you're looking for a long play, you could try it right or right out on the 20 MA with a quick stop, right? If you start losing the 20 MA, you might want to then retry at the gap fill, maybe selling some out of the money, same week out of the money puts down at the trend. So that's my plays for the Baba. IBB, let's pick up the pace. So this is in a consolidation pattern, lower highs, lower lows, your mid-range here. If you're trying long, 289.71-ish area is your stop. If you lose that, this could come back down to the backside of the old downtrend line around the 200 MA. So this area is important. If you want to play it, if you think that this is going to hold and we're going to press back up out of the channel, I'd either put a buy stop up over this high, this 298.55, or sell some out of the money puts down near like the channel low. If you think it is going back down to the channel low, buy these, sell these, or buy these and then sell 2 times here. That's a way of playing it. Sometimes what I'll do with those overwrites, if it happens quick, like let's say you buy 1 by 2, I'll close 1 by 1 and leave the 2 sometimes. If I think that it is in a defined area, and then I'm sort of closed my short and then I'm like long light, if you would. BIIB, this was one of the ones that got this was really the, hold your horses. This was the peak, right? When this had this, when was this? No, this was it. This was when I said I thought the blow off top happened. Boy, was that prescient, right? You could go back and take a look. That's an example, by the way, if you're ever looking for what an exhaustion gap looks like, and Baba looks a little bit similar, right? Oddly enough. But look what happened. You came back down to a reference low and had the bounce before the full articulation lower. And this spent a lot of time chopping before it really got ugly, right? But this is what these blow-offs tops look like when you have big moves up and then that big gap with like kind of like an elongation here, and then it came back down. Once, by the way, below this low, 456.06, you might not have been shorting the very top, but this was amazing trade location, and we had discussed this. Anyway, still below the channel, right? We never even got a channel touch here. It stalled on the backside of the 61.8 of the range, and now is coming back down. So not looking great for IBB short term. The 200 MA has really been in key for this. Look at this. Look where this gapped up and failed and came back down hard. This is really what is incredible, right? And then this came down to the 78.6 range and then bounced to the next fib and then fell off. This is very technical trading. So at the very least, I need to see this thing clear the 50 MA. If you can clear the 50, I think you'd see the 100 and potentially even the 200, which would be the backside of the old uptrend line. At some point, this may get tested, and it would be a great right or right out short at the time. If you can clear and hold the 200, we would go a lot higher. Look what happened here. When she cleared, you got to move to the top end of range. So if you really are if you're bold, you could buy this thing up on a close above the 200 MA, right? Or any move really above it for row long. In the meantime, this could come down and retest some of these lows. I wouldn't want to be long this until it at least can clear and hold the 50 MA. Look at this. You have a potential secure high here, right? You have a high, a higher high, and now a lower high. A high bookended by with elongation, bookended by two lows. So below the 2-day low, what am I doing? This did play out. I'm missing this. You did have the gap down, so this was a secure high. You are running lower, and this probably will see the lower end of range. Wow, I don't even know how I looked at this, and geez. All right, you got exactly what I thought would happen, the move lower. Anyway, this area here should likely be retested now. If you had failure for some reason, you could probably put a stop above the 3-day high here, 257.38. That to me would be not acting properly. Like you had the gap down, and then maybe there's news So at the very least, I really need to see this thing clear the 50 MA, all right, for me to be long. IYT, the transports. Now, this is getting kind of interesting. You have a potential, and I shouldn't say potential, you do have a bit of a negation of the head and shoulders pattern. And this is a textbook nasty head and shoulders, by the way. And I'll show you why right now. Look at where the right shoulder is. It's much lower than the left. For right hand articulation lower, and you did get it here, and it stopped. It was a failure. It was a look below and fail, and now back up. This is a higher probability of success for a head and shoulders that's going to break down. When you have a right shoulder that's above a left shoulder, it's a lower probability. So this is a very ugly pattern that is now failed. So if you can hold above this 167.77, and really even, I'd be even, believe it or not, be comfortable with a pullback to as much as the 100 MA, because look where all this resistance was. The move above it wasn't sustainable. You played around here. Even a check back to the 100 MA is still okay. So as long as that 100 MA area holds, like between the 165s and 167s, this is okay. Below there to me would be, this would now have been a look below and fail and a look above and fail, and then it's sort of all bets are off which way it'll resolve. But as long as this is above the 100 MA, it's still kind of okay in my book. And look what's even happening here. The 50 MA, which was all this support, is now flattened and now starting to bend back upward and is kind of along this where this old trend was, right? You had this look below and fail, back up. So the ideal scenario would be for this thing to just kind of like chop for a while and then go up, which it is doing. It's stalled on the backside of the old uptrend line. So it's hard to say that we're going to fully go yet, but as long as you stay above the 100 in this area, I think it's okay. Below there to me could easily, you could play a quick short below the 100, probably for a move to the 50, and this sort of, I guess now, informal regression line. XLF. Also, a pattern failure here. This is a head and shoulders down, higher low, and now up. You've basically checking back to this area. In my view, again, this 100 MA is a key area. And the 50 now, look what happened. It was starting to roll over. It's now starting to bend back up. So as long as this like area holds on a pullback, which is sort of mid-range, it's all right for a right or right out play, somewhere between this 50 and 100 MA. As long as this holds, though, above 2409, the risk is up. Below here, I think you would see the 100 and the 50. But as long as this bar holds, this was the Fed day bar, I believe, the low, 2413. So as long as that 2413 to 2409 holds, it's okay. And above 2454 would be an add, in my view, for a retest of the 25. So that's XLF. A couple of things that are interesting. This bank index, BKX, came up from the bottom, now kind of consolidating. Again, 100 MA, look, caught it on the Fed day. So as long as this 100 MA holds, it's okay. Below there to me is a little iffy. I think you'd see the 50 at the 50 very quickly. Iffy to the 50. JPM. Not quite as strong, right? We didn't get above this high. Kind of just playing around the 50 MA. If you're long this, the 50 to me now is a stop. If you want to row short, below the 50. A little disturbing, right? If the XLF is going to get going without the leader, right? Without JPM. Oddly enough, same kind of problem with Goldman Sachs. This was kind of a look above trend. It got to the neckline, just a check back, and now failing back lower. This 20 MA is important, so I'm not going to get cray about GS here just yet until it loses the 20, and the 200 is right below here. I don't know if this thing is just going to completely fall apart, but it's not the prettiest of pattern, and I really would need to see it clear the 226.94, which I think if it did, would see the 100 and probably see 234s very quickly, so you could, make a few points in there quick. So I'd like a buy stop up over these like 3-day highs, or I'd get more interested, and maybe on a retest of the range low again. Yeah. Citigroup. This is the best of the bank patterns, right? And I even have to adjust this again, 65.40. This is a breakout, right? You had these highs. A check back here to me is fine. Would be okay. I don't love that we're trading above the kind of resistance, but a move back into the middle of the range I think would be okay. The pattern looks all right, but look, this is kind of riding the backside of the old up channel, right? And now it's been holding and holding and holding. So in my view, any pullback to that is a buy right away for at the like 100 or whatever, the 50 down into this region to me is still okay. If you wanted to be a Chicken Little, and I often am, I'd probably be looking to sell puts same week or next week below the 200 MA, like kind of at this range low around 55s. I think that area would probably hold in the short term because look, even if this is a look above and fail, it would be and it rotated down to the lower end of the range. That would be such a big move already. I think that area would hold. So yeah, that's my play. If you're bearish on it and you start losing, like let's say the 10 and 20 MA, you could buy some put spreads for a move lower. But this thing looks like, in general, it looks like a bullish stock. S&P land. Now, I usually talk about SPY, and I will. But SPY went ex-dividend. They paid a dividend this week on, what was it, Thursday or Friday? I think it was Friday. So this candle looks weaker than it should be because of that gap, right? Because of the, oddly, it still closed inside the range. It paid like $1 and change dividend. Still held the 20 MA. So let me just show you something before we get into SPY analysis. I want to show you what I mean in the cash, SPX. This doesn't pay a dividend. There's a pattern here, and it's called a triangle. A diamond pattern. And I noticed this in this play here. So I'm watching the diamond very carefully. Look at the apexes of this bar. This was that kind of big reversal day. Oddly, it wasn't even the Fed day. But you could say this was the Fed day. You've had now 2 look below and fails with higher lows at the 20 MA. So I'll say this. SPX is okay as long as this day's low, like the 20 MA holds. If you lose the 20 MA, I think it's a little iffy, and I think you could see a fall lower to kind of retest maybe the 50 MA. Like that's sort of where this breakout area is. There's a lot of congestion there. So keep in mind, 20 MA is very key. If the 20 MA holds, like over these 2-day highs, is a long for a move up to the higher end of the diamond. If you lose this Friday low, and that would be below Thursday's body, and below the 20, I would probably dabble with a little row short for at least a rollback to this old channel area, but more than likely a 50 MA. Now let me show you what that looks like in SPY, because this is what we mostly talk about. Now, all right. So while we were up here in cash, we were down here because of the dividend, right? I've for a while said I thought we could retest the breakout area. We didn't quite fully get it here. This was the breakout here, around 240.32. And the 50 MA is down at 239s. Look where these highs were. Look where all this congestion was. Now, the expected move this week is $2.12, so that would be up to 244.76. So it's basically back up to the higher end of the range. Remember what I said with the diamond? It could, if you were above the 2-day high in SPX, that would basically take you up to the higher end of the range here in SPY. Move to the low with the $2 would be 240.52. So basically this area, the breakout. Now, IV might increase, and I would say that the 50 MA would be potentially in play if you start losing this hammer and these lows again. Like, look here. this was now technically a look below and fail. So what happens when you have a look below and fail? You should theoretically articulate back up to the higher end of the range. Very possible. We've had now 2 look below and fails of the Fed day range. The market, quote unquote, should see the higher end of the range. If it does not, and you lose those 2-day lows, meaning these lows, it would be when something should do something and it doesn't, it goes the opposite way and it comes back down. My sort of worst case scenario here for the market, we spent some time above the channel here, would be a gap fill to 236s. That would be the 61.8. It's the 100 MA. It's the gap fill. It's basically the channel with a little noise on the other side of it. So 238s to 236s is sort of like my max down target at the moment. This was also the very big breakout level, right? Where this kind of got going. We retested, went up again. This to me would be like, everyone wants to know where the risk is, where the worst case scenario. Of course, the worst case scenario could be a disaster, but you don't really crash after all-time highs. It just doesn't work that way. There's usually a rally to a lower high on a separate leg. So right now, I'm thinking the worst of it would be a retest of the breakout, maybe a move to the channel low, and maybe these fibs. So when you're talking, and listen, that's a big move, right? I mean, I'm not trying to minimize it. We're up at 42s, and if it came down to 36s or 38s and 36s, that's a pretty damn big move. So what I'm saying is, if you lose the low here, Friday's low, you could buy a put spread or a put ratio. Like buy these, sell one of these, maybe sell one of these, or buy these and then sell like these. However you're comfortable. And when I say one, I mean 1 by 2, right? I don't like to say 10 by 20 or 20 by 40 because different people have different size accounts. So I always keep it simple. I just talk about 1 by 2 or 1 by 3s or whatever. If you want to be real crafty, you could buy one of these, sell one of these, and then like sell one of these or one of these. Like kind of spread it out that way. I think that would be a winning trade. IWM. Now we're talking about look above and fails. This is a bit more of a bearish pattern. Look at this. You had a look above and fail here, came back down. Again now, we came up from the lows, higher low, right? But came up very quickly. This was now a bit of a look above and fail, pulled back, bit of a lower high, and now we're below the pullback, this kind of like doji bars low. The last couple days have been bought up, but this pattern could pull back to the 50 MA and this 138 breakout point. The 137s or the 50% fib. This to me would be sort of the near-term downside target where I think there'd be support. Look, you have the 50 and the 100 all down here at the 50% fib in the breakout area. So I think that like 137s, 138s would be a hard level to just break down from at least the first time. I think there'd be at least a rally. So this to me would be my first downside target. Above the 2-day highs and above 140.86, which would be a trend break, I think we could come back up to see the highs. So that's sort of what I'm looking for. Here is where the real question lies, and that's in the Qs. We got the channel high. We're now at the channel low. And these bars, you have a lot of hammers. You have a little bit of a stutter step to the 20. Now we're basically back down to the 50. So here's the big question. Is this going to hold? Or is it going to fail? Now, I can't tell you for sure, but what I can tell you this is what should happen if you lose these like lows, these hammers. You have 2, 3, you have a higher low here, and you have basically equal lows at the 50 MA. So if you lose the 50 MA, I think we would see the 100 MA and this gap fill down here to the retest the 132s. Now, above the 2-day high, to me this would be a successful retest with a higher low, would be along probably for a move back up to like the 20 and the 10 MA. Maybe even higher. So these lows, this 137.47, 137.49, 137.64. Like these areas, these 2-day low, I think you could use 137.49 and the 50 MA. Anything below there to me is probably a short. So I would buy these puts and then like sell 2 times out of the money, or if you just want to do one by one, buy these and then sell these. And I'd probably do it, I don't know about same week, but if you're doing the ratio, I like same week or next week. If you're doing a longer, if you're looking for longer dated, you could do like buy these and then like buy these longer dated and then like sell these near dated. I think that would be an interesting play. Expected move is $2.74, so up to 140.89 or down to 135.41, which is basically these lows. But I don't know if these lows would hold again because this was just so close. I don't think this would just stop here. I think it would go lower, and that would start getting, it would probably build a lot of fear. So that area is important to me. Apple is sort of having that look, like it's looking like it might be coming down. You closed below the 100 MA here. The one I've been looking for this check back here to like 140.15. Look, you had this big consolidation area, this channel, and we've been trading above it. So the first check back is usually a buy. So this area to me is important. Apple could go further. The real reference breakout, and I don't have it, it's grayed out because we're away from it, but I'm going to put it in here back in blue. This was a big area for Apple. A big breakout area, 134.54. So if you lost this, I think we would come back down to see this area, and that area to me would be an important right or right out. Look, it's a big volume distribution node. See, this area to me would be a big row long play if you wanted to try. Like if you want to play short, you could buy the 140s and then sell like the 134s or 135s. There was also some reference gap fill, an older gap fill, and the earnings gap high here of 130.49. So somewhere in this like $4 or $5, and you have a 200 MA coming up. I think that area to me would be the kind of where I'd be targeting for Apple. I think everyone at that point would think there's going to be a gap fill, which I don't think would happen initially right away. And I think this area would be an area to either sell out of the money puts or cover shorts, or even try initially right or right out longs. So we have to see if the 140 holds. If it doesn't, I think we see 134 to 134.54 to 130.75, and wherever the 200 MA is at that time. And that area to me would be at least right or right out would be a long, and for sure a spot to start covering. So that's Apple. On the upside, if we don't get the down move, above the 2-day high, 144.51 would be a move back up, right? Probably to retest at least the 50 MA. Maybe even the backside of the old up channel here in 151s, 150s. So always keep that open. It doesn't have to be a down move. Now this is really where the action was this week, right? Amazon. You had this like flash crash here, this pullback here to a higher low, 50 MA. We talked about this as a buy. We talked about a starting to clear it out here at the 20, pulled back again, and didn't even quite get the 50, closed up, and I talked about this. I said as long as we closed 962 to 965, and we closed 964.17, it was okay. And we had the gap up the next day. It should have been no surprise to anybody. But the reason it gapped up was because they bought Whole Foods. Now, usually an acquirer, and this initially was down, right? Let me show you this. Sorry, intraday, 1 day, 5 minute. Look where this was down to pre-market, 946.16. I had some alerts down here. That's didn't close particularly impressively. I think it was maybe below the 20 MA. Let's look at that style. 3 years. I've been on 4 for the video, so we'll stick to 4. Right on it basically. So but it was still a big gap. I think this was just people booking some profits here. Look where this kind of stopped to, right? The low here was 1,001.25. This was just below 1,000. I think you had people who wanted to sell 1,000 basically still. So is Amazon now bullish or bearish? I think it's sort of neither. I think it's just going to chop for a while. And I think it's going to be in this big range for a while. You have a channel here, a low. The low of their earnings was 910. The low after hours was basically just the 50 MA, again, maybe a little bit below there, 946. What did I say? It was 946s. So basically these range low. So I think this is going to chop around for a while, frankly. If Amazon were to like be bearish on Monday and lose the low of day, maybe it fills the gap down to like 965. But on 427, that was this earnings gap. That high in after hours was 965. So as long as Amazon is really north of 965, it's still okay. That's my opinion. And the 50 MA has been the support, and I guess that's going to be the key. Above the 50 MA is okay, below it to me is more iffy. Whole Foods. Now, there's a lot of tough talk about Whole Foods getting another bid. I think if Walmart or any of these other companies bid for Whole Foods, they'd have gotten hammered. Because Amazon now is using other outlets, brick and mortar. They open up the store in Time Warner as a bookstore and to display Amazon items, and now they're buying Whole Foods, which is a low-margin business that's been struggling, frankly. So why was Amazon up with the use of the buying of Whole Foods? The answer is very simple. This is now a new way for them to push Prime memberships. And Amazon is given an amount of slack that very few, maybe no other company in history has been given on as long of a long-term basis. So they could do things like have Prime rewards, Prime memberships. Whole Foods has, by the way, struggled with getting their rewards membership thing going. I mean, they've done a little on the West Coast, but it's one of the, I think, the only supermarket chains that doesn't really have a serious rewards program going. It's really, quite frankly, a joke. But they made a deal. Amazon, I think that this will be an amazing thing for them to really have good, home delivery now. They could use this to kind of compete with Fresh Direct and take on a lot of the other retailers. Now, this means that margins, that the cost of food has been coming down lately, and it's going to come down now even more dramatically, in my view. But look at this. This was the big range that Whole Foods had been in, and Amazon agreed to take it out basically at the 50% fib. And it stopped here right on the downtrend line, the primary downtrend line. Now, there's some fever that they're expecting a bid, another buyer to come in. I got the email from Whole Foods announcing the merger with Amazon already. I think that that's the only buyer that frankly makes sense that it would be accretive to. I think that's the only one who would have a competitive advantage about buying this. I mean, for any other company, a Kroger or a Walmart or whoever the hell wants to buy this, I don't think that they would have the same synergistic effects that would make it a profitable deal like Amazon would. I thought this was a brilliant idea for Amazon. I think it's going to be done here. Could there be another bid? Maybe it comes up to 47s to fill the gaps, but I don't think it's got much more in the tank. And look where this stopped. Right on the downtrend line, right at the 50% fib. I think the play here is kind of done. I think there were a lot of people short this. You could see the prior day, this was down big, and then it announces the deal, and it was up, and people held it. I mean, I think the deal is a done deal. I know S&P is threatening to downgrade Amazon's debt or whatever as a result of this, but this to me seems like a done deal. But I don't think Whole Foods really has that much more up to go, and if it does, it may be to 47s. So I guess if you want to try, with below 41.75, which is the low of the day here as a stop, you could try, long Whole Foods. Kroger. Now, this was the darling, right? These were the guys who were giving it to Whole Foods, and they took, they were running the show. how the mighty have fallen. This is a huge topping pattern, and this completely got obliterated. I had been looking for the 61.8. It wound up getting below there and then rallying now finally. This was down like 30%, I think, in like a couple of days. Holy cow. I would love if this came down to retest 17s. This now, by the way, down here is about 10 times earnings. I think up here at the peak it was like 17 or more a time. I don't even know. I'd have to look. But it's now 10 times or less. Assume Whole Foods is going to squeeze them in the margins a bit, so this could become a little bit worse. But it's not going to happen right away. And I think that down here you could probably start nibbling. I'm hoping for a move a little lower down into 17s. You can see this is really where this big epic run started from. But this is maybe enough. So I think you could probably nibble a little bit of Kroger down here for at least maybe some out of the money put sales or at the money put sales for some type of a retracement maybe. This just to me is now very overdone. And the best thing I'm hoping for, because I don't have a position on in it, would be for another gap down lower. I don't know if that's going to be the case, but I am thinking Kroger probably is, maybe an area to buy here. Anyway, that's the story with that. What are the other ones I wanted to... Oh, Costco. For the first time in a while, maybe Amazon is going to compete with Costco. Wow, this got hammered pretty good off these highs. I drew a fib in, and I have some thoughts on Costco. So, you have a lot of gaps, right? There are plenty of gaps. This basically filled the gap and had a huge rally right on the 100 MA here. Look where this 100 MA here was key. This was 100 and 200 MA confluence, so maybe it was a little bit more key at the time. But I'll say this. You have a big range in Costco this day. If you lose the low of day, 165, I think it'll fill the gap to 160. You have a 50% fib at 158s, and you have the 200 MA at 157s. So what I would be doing would be looking to sell maybe 53 puts same week, maybe, or probably same week. I don't know if I'd even go out to next week, because if this came down hard and fast like that, there would be a lot of juice in them. If you're bearish on this, you could always buy like these puts and then like sell 2 times, or like maybe buy these, sell these, and then sell these longer dated if you think like Costco is kind of peaked and is going to retest, like, retrace all of this. It's possible, but I have a feeling the 61.8 of the range is going to be the 50 and the 61.8 are going to be some pretty decent support if this lost that low. Above the high of 170.60, this might try to fill the gap. I don't know if it would fill it all the way, but it would probably fill it a little bit, at least to like 174s, maybe 175s. So, listen, this is a kind of a topish pattern. Look, you had these kind of initial breaks that went a little lower and then chopped. This area is a big area of support. So if this does come down, I think this area, like I said, will be support for a while. This was where this big consolidation is. There's a big volume node there. Let me try and show you on a longer dated chart here. This is my volume profile. Look where this big spike of volume is. Look at this. Look at all this volume here. It's a big volume node. So I have a feeling that area would not be so easy to knife through. You have this area here, this area here. You've spent a lot of time there. So I think that there would be some muscle memory down in this region. So if we get down into that like 200 MA area, maybe same week I'd sell like the 153s, or maybe if you want to go out further, the 146s. Not all that bullish on this right here because it's run so much, but if it did come down more, I'd be interested in maybe nibbling for a bounce. Target. So this has been getting monkey hammered for a while. Although look at this. This was a pretty nasty break, and it was met with a lot of buying. I think a lot of people have been looking to buy Target for a while for a bounce, and they sure did on Friday. This didn't quite get the 61.8, which was my buy point, which is very frustrating. But I think over the high, this could fill the gap to the 50 MA. Look where this breakdown look at how look where this breakdown took place, below the 50 MA, then once above it, then below it again, took time, and then once above it, it rallied. So I think that this, if you were to clear 52.61, would see the gap fill. If you start losing this like body here, 151.42-ish, I guess, whatever, this could come a little bit lower. I would not be buying the 61.8 at this point again, because we got really we basically got it and it bounced. So second time, I'm not always so keen, unless it's like let's say it came down here and you had two hammers, tweezers, like let's say this was a big gap down on Monday and then rallied again. Then I'd be interested in the long even more over the 2-day high, because it would show that there were buyers. You know, when you have one hammer, it's important. When you have two, it becomes like exponential. And when the more hammers you add up, the more, first of all, the more exponential they have when they break. Like if this was like, let's say like 2-3 days of hammers and then it broke, it would be a disaster. But usually I think that those are good areas to play against. So I like Target for a bounce for the gap fill, if it can hold above Friday's high. If not, just stay away. Walmart. Now, this was one I was a little bearish on. I mentioned everyone was all bullish up here into the earnings, and where was it? Here, into the earnings, and I said we were getting close to this gap fill and channel high, and I thought we were going to have some pullback, and boy, did we get it here. This 200 MA here has been important, kind of. It's also the 61.8. 71s. So this also got bought up though, oddly enough. Didn't quite get the 100 or the 50% fib. So if there's strength Monday, maybe this tries to fill the gap, but I would prefer more weakness and for this to come down a little more. I would love to buy this around like the 68s, which is the channel low. Like if we got like basically channel high and got to move down to channel low and a fib, I'd be very interested. This is the big 50% fib and the 78 of the range. So this area to me would be interesting. If you lose the low on Friday, I think you could buy puts like these and then sell like 2 times out of the money here, or buy one, sell one, like that kind of a range. I think that area would be very interesting to me in Walmart. If we break above the range on Monday, I'm like this, I think the 50 MA is a good area to book some, and then maybe the low end of range of the kind of the breakdown, because that was this reference low, this hammer, 77.76. Let's get back into tech. Facebook. This has been acting okay. Some resistance at the progression line. You've had some hammers here, like kind of like a trend low, higher low above the 50 MA. We are below the 20, which was some support, which is a little disconcerting. And if the NASDAQ does roll over, this could see my max worst case scenario is down by the 133s. That was like the breakout, and the 50% fib is at 134.57. So if there's like some bigger rollover in NASDAQ, the 200 MA is right there. This is the area. I'd probably be buying like these puts and selling 2 times out of the money here. I think that area would make a lot of sense to me to initiate a long for a bounce. And if we were to get down there, I would just sell even still further out of the money puts. I'd sell like the 128s. So that area to me seems interesting. I don't necessarily know if you need to chase this up here, but I mean, it's kind of hanging in there. Looks kind of all right. Netflix got my measured move targets, and I talked about bailing here, and we're now below the 50 MA, and we held the 100 MA. So I think if you could buy stop Netflix up over 155.68, that's all these highs, these reference highs. If it did, I think it would come back up maybe to 160 into 160s, the low 160s, maybe the 20 MA 159s. If you lose the 100 MA, this could come much lower, maybe even to the gap fill and the trend line, the primary trend line. And the 200 MA and the gap fill are all down at 133s, right? That was where the breakout was from. So I don't mind buying like put spreads or put ratios for a play for a move down there. as long as it's below the 50 MA. If it gets back up over the 50, it's, probably don't want to be short, and you might want to be looking to put it out short at the 20 MA. That to me would be a good area. But you're now you moved out of balance, right? This was balance, you moved out of balance, and now coming kind of back into the balance area. So there should be some muscle memory soon, a little bit lower, at least for a bounce. Again, this is all-time highs. You don't really just crash from all-time highs. I would be a buyer, though, at the gap fill and the trend, and I'd probably do it in size aggressively for a day trade bounce at the very least. And if you want to be a Chicken Little, and nothing wrong with being a little Chicken Little, sell some out of the money puts, same week or next max. GOOGL. Above the channel high, we came back in, looked into the channel, it didn't like that, and now we're back up, and now we're back in, and you have 2 days of... you have a lot of cattails here. You didn't quite get a 50 MA touch, which I would have liked. Now, take a look at this progression line of Google. We gapped above it, right? This was big resistance. It should now be big support. So I would have loved if this would have just came down here, right? Initially. Like here, I would have loved to have seen this bounce and then move lower. I don't love that you had two bounces here. But if you lose this area, this reference low, 936.80, I think it would be a short probably down to the progression line. And then I'd probably be looking to reverse on the progression line for either a long or at the very least covering some of those shorts. Above these 2-day highs, this should fly back up to the 20 MA. So above the 2-day high, I like it long for the 20 MA. Below the 2-day low and 50 MA, I like for a move down to the progression line, which is roughly, if it happened on Monday, and I'm not saying it will, but it could, would be like 914s, roughly that area. Yeah. It's also possible that there's a gap fill, maybe, but like if you lose these lows and you maybe cover half here and then, hope for this, but, just keep trailing down a stop. Tesla. Wow, we're getting really long in the tooth here, so I think we're going to end on Tesla. I was hoping to do more, but we're running quite long. Anyway, this had a bit of a topping tail doji. That's usually the end of a move. I think that this is just going to chop for a while. If there is any kind of pullback, we're above the channel high. I mean, maybe you target, there's like a channel within a channel. So this breakout area was like 325 and the 50 MA is there. So if you start losing these lows, maybe it gets like a pullback to the 20 and maybe even the 50. But I think the 50 MA area to me is probably, that's where the big volume distribution begins a little bit. I'd probably be looking to sell out of the money puts there, probably at like 287 strikes and below. That's where the 100 MA is and this other real breakout and reference lows. So that's my scoop on Tesla. Anyway, I was hoping to cover a lot more, but we're way over an hour already, so I'm going to just cut it short there. And I'll cover the rest in my midweek update. Have a great rest of your week, or weekend and into week. And if you're not following me on Twitter, my handle is @JustinPulitzer. Please like this video, leave some comments. The best way to say thank you, though, is to retweet it. Please retweet the video. Have a great rest of your weekend. Cheers.